Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the live Market Chameleon webinar series. Before we get started, let's take a look at this shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. One last look at that disclaimer, and let's welcome Dimitri Pargamonic to the stage. How you doing, Dima?
Good morning, Will. How are you?
Great. Let me share your screen.
Good morning, everyone.
Chameleon landing page.
And I think what we'll do today is look at a call spread screener, just to change it up a little bit because we're looking at the put spread screeners. And first, let me navigate to it, and then we'll start talking about some of the analytics that we're going to discuss. So up top, where you see screeners on the main menu, let's do over here on vertical spreads, we'll do bull call spreads. And what this screener does, we could close this explanation to expand our screen. And what you'll see is up top, we have filters for the screeners with different tabs. And below, we have the data elements for different combinations of call spreads. So what you'll see here is we have over 20,000 different combinations. It's defaulted to the next or the nearest monthly expiration over here, because when we do vertical spreads, call spreads, you're looking at a strategy of buying a call on one strike, selling a call on the higher strike within the same expiration. And we also have by default that the spread, the maximum difference between the strikes was $5, and we could change that, using these different filters. So what we're going to do is I'm going to first expand this expiration, and let's look for spreads that expire within the next 30 days. So this will expand the, let's click on that, expand the available expirations to analyze. So it's not necessarily just, one expiration, but after we did that, you could see here now we have different option expirations. So these are the spreads that we're analyzing. So November 7th expiration, it looks at the 215, 220 call spread in NVIDIA. You can see October 31st, the 200, 205 call spread in NVIDIA. So this is by default sorted by stocks with highest market cap. That's why we see a lot of NVIDIA here. But you could see there was 120,000 entries. So if you're looking for a specific stock, let's say SPY, you can type it in here, or we could start filtering, using our filters. So I'm going to take out the SPY, but now we have all these, you could see SPY call spreads. But what we're going to do for today is let's look at call spreads that actually traded in the market. We're going to analyze those. Okay, so what we're going to do is go to this volume analysis tab. And in this volume analysis tab, if we go from left to right, we still see that this is for NVIDIA. This particular spread, we could see over here, these are still the particular spreads on this tab, but over here, we could see here the strikes. This is the market price. If you were going to, do it on the displayed market price. We have the volumes of the individual legs here. So there's 530 contracts traded on the 215 November 7th strike, and 737 contracts traded on the 220 strike. But over here, this shows us the actual trades that we detected in the spread itself. So not in the individual legs, but where we detected that a spread traded, a call spread traded in these particular legs in expiration. So let's sort it by highest volume. And click on this. It's going to go through and it's going to sort it by volume. Oh, so sorry, I did it by lows first. So let's click it again. So these are, it's when you click it, it sorts highest and lows. So I'm going to click it again. And now what we're going to do is sort the biggest volume call spreads. And you could see here, this top one showed us 65,000 contracts in total traded in this UAL, United Airlines. It was the October 17th, 110, 115 call spread. Okay. So it also traded 78 different times on a day. So this wasn't just one trade. This was cumulative, where throughout the day, this particular call spread traded 78 times. The last time it traded was 357.35, so all the way up to the end of the day. The VWAP price, the volume weighted average price, was 76 cents, with the VWAP bids and offers of 67 cents, 78 cents, with a reference price, VWAP or reference price, of 104.02. So this gives us an indication what the volume weighted average price was of this spread, and corresponding indicated market prices, and where the stock reference price. And we could see just from this, it looks like it was trading closer to the ask price, right? So it's, if we're looking at 67 cents, 78 cents, this shows us those. It wasn't necessarily on the offer price, but it was closer to the offer ask price based on those VWAP metrics. We could also compare it to the current price. So right now, right, it's 95 cents. So you could see that, that 95 cents for 76 cents, the market increased from the traded price, right? So these were already trades, historical trades, but the markets, keep moving. So right now, the market is 95 cents. So the market actually increased from those traded prices. Same here, FIG, right? Market price $1.24. Right? We could actually look, I think here's the market data. So these are the debit spreads, and these are the market, the spread bid, the spread ask, spread bid, spread ask. Okay, so these are the market prices, and we're analyzing it from the ask side, because if you're buying a call spread, you're looking at where is it offered. So let's come back to the volume analysis. This one was 64 cents, traded 5 separate times for total volume 38,026 contracts, with a reference price 63.12. And you can see here the market price was higher by the end of the day. Right, that ask price is $1.24 versus 71 cents when these were traded. And you could go down the line, right? So now we're looking at, some of these highest volume traded spreads. And then it allows us to then narrow these down, so we could analyze further to see if there are certain opportunities that may interest you or fit your portfolio or your particular outlook. You could do this very quickly, from this screener. If we come back to the summary table, you could also see what the current market prices relative to our theoretical values. Right? So even here at 95 cents, it looks like it's below the theoretical value. 94 cents, below the theoretical value, 71 cents. This one's above the theoretical value. So we have all of these metrics in front of us. Also, just as I'm noticing over here, most of these spreads look like they're out of the money call spreads, right? So here we could see where the stock price is, 104.35, which is below the 110, 115 strike, 63.71 below the 65.70 strike, 53.96, 57.62 strike. So a lot of these are upside out of the money call spreads that have the biggest volume in in our call spread screener. So I kind of wanted to just get you to this point for today. So as a starting point, you could see like, okay, I could filter these out, start my analysis from there. If you wanted to, let's say, narrow down just to the highest multi-leg trades, you could go to this multi-leg trade volume, and you could just set it, let's say 1,000 or more, let's say, and then this will return spreads. So you can see 124 of them, where there's at least 1,000 of these similar spreads traded. And this really helps certain traders because now we could observe, well, what were market participants doing? Where did these spreads trade? Where did they trade relative to the markets? How many times? Where were the reference prices? This helps with price discovery. I think at that point, I'm going to stop here and throw it back to you.
Hey, that was great, D. Thanks for bringing these webinars to the Chameleon community. We will see you tomorrow, my friend.
Yep. Thanks, everyone, for joining. Have a great trading day, and hope to see you tomorrow morning.
Great. Thanks, D. Hey, I think it's Raffles. Thanks for joining. You can email me support@MarketChameleon.com. The HD resolution, I'm not exactly sure what you're meaning. We operate these basically off our laptops, so I don't know what type of tech that would take. But if you email me support@MarketChameleon.com with any recommendations for what we may need to do that, we'll try. For those joining the first time, remember to check out the free Market Chameleon service. You get 7 days free. Start the free trial. Click on any of the buttons. They're all over the place with a free trial. Everyone else, thank you for joining another Market Chameleon webinar, and we will see everyone tomorrow. Remember, like us, follow us on all the social platforms, particularly YouTube. Thumbs up, always appreciated. Have a great day, everyone.